Being a business owner comes with many responsibilities, and one of the most important is filing your taxes correctly and on time. Tax season can be a stressful time, especially if you're managing your own books, tracking expenses, and trying to understand ever-evolving tax laws. Whether you're running a small business, freelancing full-time, or operating a growing startup, understanding how to file your taxes properly is essential to staying compliant and financially healthy. Here are the top 10 tips to help business owners make tax filing easier, more accurate, and less stressful. 1. Know your business structure. Your business structure determines how you file your taxes. Whether you operate as a sole proprietor, partnership, LLC, S corporation, or C corporation, each structure has different tax forms and requirements. For example, sole proprietors usually file a Schedule C with their personal return, while corporations must file separate corporate tax returns. Understanding your structure helps you file the correct forms, claim the right deductions, and meet filing deadlines. 2. Keep meticulous records year-round. Accurate record-keeping is the foundation of successful tax filing. Keep detailed records of income, business expenses, receipts, invoices, payroll, and bank statements. Use accounting software like QuickBooks, Xero, or Wave to organize everything efficiently. Organized records reduce errors, speed up the filing process, and provide necessary documentation in case of an audit. Remember, the IRS recommends keeping records for at least 3 to 7 years. 3. Understand what expenses are deductible. One of the advantages of owning a business is the ability to deduct qualifying expenses, which lowers your taxable income. Common tax-deductible business expenses include office supplies, internet and phone bills, travel costs, business meals, marketing expenses, professional fees, and home office use, if applicable. Learn which expenses apply to your business, and keep receipts for every purchase. Be sure to separate personal and business spending to avoid confusion. 4. Track quarterly estimated tax payments. Business owners who expect to owe $1,000 or more in taxes for the year usually need to make quarterly estimated tax payments. These payments are due in April, June, September, and January. Missing these deadlines could result in penalties or interest. Use IRS Form 1040-ES or speak with a tax advisor to calculate the correct amount to pay. Budgeting monthly for these payments helps you avoid last-minute cash flow issues. 5. Don't forget about self-employment tax. If you're self-employed, you're responsible for paying both the employer and employee portions of Social Security and Medicare taxes, known as self-employment tax. For 2025, this tax rate remains around 15.3%. Be sure to calculate and include this tax in your quarterly payments and overall tax plan. You may be able to deduct the employer half of this tax on your return, which reduces your taxable income. 6. Use tax software or hire a professional. While it's possible to file your taxes yourself using tax software like TurboTax, H&R, Block, or TaxAct, many business owners find value in working with a certified public accountant, CPA, or tax preparer. Tax professionals can help you identify deductions, stay compliant with current tax laws, and avoid costly mistakes. If you have employees, multiple revenue streams, or international business, professional guidance is especially helpful. 7. Be prepared for Form 1099-K and other tax forms. If you accept payments through third-party platforms like PayPal, Venmo, or credit card processors, you may receive a Form 1099-K, which reports business income processed through those platforms. Similarly, if you hire freelancers or contractors and pay them over $600, you must issue them a Form 1099-NEC. Be aware of the forms you'll receive, and the ones you need to send, to ensure your tax reporting is complete. 8. Take advantage of tax credits and incentives. Beyond deductions, there are also tax credits available to small business owners. These include the Small Business Healthcare Tax Credit, the Work Opportunity Tax Credit, and Green Energy Credits for sustainable practices. Unlike deductions, which lower taxable income, credits directly reduce your tax bill. Research which credits your business may qualify for and don't leave money on the table. 9. Plan for retirement contributions. Contributing to retirement as a business owner not only helps you plan for the future, it can also reduce your taxable income. You can contribute to a SEP IRA, solo 401k, or simple IRA, depending on your business size and structure. These contributions are typically tax deductible and help lower your overall tax burden. Making regular contributions also demonstrates responsible financial planning to lenders and investors. 10. File on time or request an extension. The tax filing deadline for most businesses is March 15 for partnerships and S corporations and April 15 for sole proprietors and C corporations. If you need more time, you can request a filing extension using Form 4868 for individuals or Form 7004 for businesses. However, an extension to file is not an extension to pay. You'll still need to estimate and pay any taxes owed by the original deadline to avoid interest or penalties. Filing taxes as a business owner doesn't have to be overwhelming when you're well prepared. By understanding your business structure, keeping accurate records, budgeting for quarterly payments, and using the right tools and strategies, you can reduce tax time stress and protect your financial health. Being proactive also helps you make smarter business decisions year-round. Following these 10 tips not only keeps your business compliant, it also sets the stage for long-term success and financial stability.